This is Damian Macy with the Friends of the Marshall Library, our oral history project. And this is Wednesday, August the 12th, 2015. And I'm in the office of the Marshall Mutual Insurance Company, which is one of the oldest businesses in Clark County. And I'm with Jeff Murphy, and he's going to give us just a little brief history of the business.
Okay,
Yep,
Damien, thank you. Just a little background on the Marshall Mutual Insurance Company was actually created or organized March 1st of 1889. Began business on July 1st, 1889, and it was established as the Marshall Mutual County Fire Insurance Company. When the company was established, it actually was established in Darwin Township, and it was strictly fire. And to give you an idea of your fire rate back then, I think the premiums that we took in the first year were $6,000, and your fire rate was about 20 cents per hundred. So the county fire or county mutual fire insurance company slowly grew. It was established by a group of farmers that were wanting to protect their, their farm buildings, their communities, and established as just local township, and then it slowly expanded to county-wide operation. Today, to give you an idea, that first year taking in $6,000, and here in 2015, our annual report. We write about $3.3 million in premium for the year, and we insure everything from farm tractors, farm equipment, to townhomes, mobile homes. We don't write any auto insurance, but we write in 28 counties in the state of Illinois now. Primarily 8, but we do have authority to write in 28. There's 11 board members, and the current board consists of Richard Glick, who has served 52 years on the board. He's the board president. Phil Partlow from the Casey area is vice chairman. Gene Higginbotham is a longtime member, served since the 70s. Lee Cutright from the Casey area. Eddie Allen from the Casey area. Tom Werns, which is from Marshall. Tom Werns' family has been involved for many years. John Meehan from Marshall. John's a farmer that just farms here east of the town. And Doug Littlejohn from Littlejohn Grain. And Doug is a school board member and, moved back to the area. Actually from the Casey area, moved over to Marshall. So now we had a couple of consolidations in the early 90s. We combined with a couple other companies. One was Cerro Gordo Insurance Company in 1991, and then Grange Insurance Company, which was up around the Sullivan, Illinois area, and that was in 1992. There are 64 farm mutuals in the state, and Farm Mutual, they have their own act. It's called the Farm Mutual Act. It's primarily a property and casualty companies. They do not write any life insurance, health insurance. It's strictly property and casualty. Our reinsurance carrier is Rockford Mutual, and we are governed by our board. We have 6 employees in the mutual. We write policies, we issue policies, we adjust our claims, just like the larger companies. So there's only been about 4 managers in that course of that time. Going back to Frank Paris, served in the early 50s and through the 70s. Served many years as a longtime manager. And then Dwight Shore served as manager most recently for 36 years. And I just took over in 2015 as manager. So there's it's kind of neat because you look at some of the records going back. I think in 1889, that first year in September, we paid our first loss, and it was a lightning strike to a cow down in the Darwin area, and that claim was $4. To give you an idea, today, you know, you have a cattle loss, and that may be upwards of 1,500 to 2,000. So
Wasn't a very expensive steak, was it?
no, no, and $4 was a lot of money back then.
Oh,
Yeah, yeah. The staff here in the mutual, we don't have a lot of turnover. I need to mention Jackie Titus. She was a longtime secretary for the mutual, and I believe she worked 42 or 43 years. And her daughter-in-law, Katie Titus, is now our underwriter. So the Titus family's had a long time establishment in the mutual.
You mentioned the mutual companies, and I think you said 64 of them in the
Yeah,
state.
left in the state.
Are most of those all in small rural type communities?
They are. At one time, there was just about, I think there was 114 counties in the state, 114, 112, but there was a county mutual in every one. And over the years, they've consolidated, or they've gone out of business. And we're down to 64. And there's a good number up in the northwest part of the state, and then you go to the middle of the state, and then the south, there's several still. Now, some of the southern mutuals have combined down there, so there's fewer down south than there is actually in the northern part of the state. But they are, you know, they may be in small, most all of them are in some small town somewhere and have been there established a long time. I think the oldest mutual in the state of Illinois is 180 years old. So it's a long time.
You mentioned starting out in Darwin. Was that probably operated out of someone's home?
You know, I
As
believe.
opposed to having an office?
Yeah, I believe at the time it was, and I can't remember who our first Secretary Treasurer was, but it was operated out of a home, and then they moved to our first official office was behind the current location in the old
On 6th Street.
Yes, on 6th Street. Yeah, yeah, and then expand to the old Delaney Bank off what used to be the old Delaney Bank, and I believe that was in mid 1970s. It may have been a little later than that. And then we've added on, and it just kind of expanded from there. But it's been the same location for a number of years. Yeah.
With the premiums and loss ratios, and I know there must be a lot of statistics and all, but are you setting your own risk factors, I guess, and all? Or are there national statistics you use to set those?
We try to create a surplus for every premium dollar we take in. We would like to have $2 in premium surplus.
Okay.
And we are at a 1.5 ratio, which is good and strong, considered strong in the insurance industry. And primarily we work with our reinsurance carrier to look, since we're small and kind of isolated in smaller counties, we look at larger companies to establish they have more actuarial data that they can help us establish rates, et cetera, to spread our risk. And of course, reinsurance costs have gone up tremendously over the years. The fire premium when we started was about 20 cents per 100, and to give you an idea, we're at 35 cents per 100 today. So not a big increase, but what has happened is the valuation of the homes and the property have increased. You know, we insured homes back in the 1880s and early 1900s. You know, a nice home was $15,000. Today, the average home is $200,000. So you can see how that drives the premium for these homes. So that, as the risks become larger, you know, your chances of a loss are higher or greater. And so it's presented challenges over the years on maintaining a adequate reinsurance, making sure that you have the proper inspection procedures in place, look at the risk and manage them, and hopefully write good business. So,
With national disasters, I mean, there's forest fires out west, and we've got hail and tornadoes and stuff here, and we touched on this a little bit with your interview, but how on earth can you ever even predict what might be the loss in something like that?
Insurance has kept records for long times, and we estimate our loss. If we can keep our for every premium we take in and keep our loss ratio below 55% of every premium dollar we take in. Combine that with our expense ratio, then it's a decent year. So you anticipate you're going to have X amount of losses. Yeah, and some years those losses may be higher, and some years they may be lower. Your reinsurance contract is a tool, risk management tool to help offset that. The insurance company has a deductible just like the homeowner. Mm-hmm. So anything above that deductible, the reinsurance company pays those claims. And they're charging you a premium for that, just like we charge the homeowner a premium. So I think the biggest change when we first started, everything was triplet carbon copy, all by hand. We are now a paperless office. We got a lot of paper on my desk, but everything is through the network system, emailed. The policies that come in are scanned and archived, and we no longer have hard copy files.
Really?
Yeah. So that's helped cut down expense. It's great when the internet works, but you have to have backup systems. You have to have controls in place for data breaches, etc. So it presents a whole new level of technology difficulties that you have to manage.
If you've got a power failure,
We have. The nice thing about Marshall is that TRW, if they do have their own generator backup system, and you'd be surprised how many communities that do not have that, and that's a nice thing for Marshall.
because when you've got that power failure, everything comes to a halt.
Yep, you're shut down, and you can still pick up the phone and call, but as far as looking up a customer's policy, that's probably the biggest downside to having a paperless system.
Do you find that is really, quote, more efficient and easier to use than going to a file cabinet and pulling out a folder?
I still do a combination of both. I like to have the notes in front of me. What it does save time on is making changes, copies of policies, and having quicker access to information. You can access it on the computer quicker than you can getting it out of the file if the information's there. But it's just like everything else. If you don't put the right data in there, then it's not good.
What about the policy application? Is that done on computer too, or is there still
policy
paper?
application is still paper, and but it's scanned in and becomes a part of the permanent record. Yeah. So that's probably one of the bigger changes that we've seen over the years. Outside the fact that risks have gotten larger, we're writing different types of risk. Established as a county mutual or township, basically farmhouse, farm building. Now we insure grain bins, hog buildings, town homes, mobile homes, docks, things outside what originally I think our founding fathers, were looking at. But as these risks have changed, we've had to adapt to the change and to survive.
You mentioned, of course, it started out as a farm business. There weren't farm machinery when that company was organized. There weren't cars. Well, was it primarily farm animals and the log cabin or the house they lived in?
Yep, primarily the main structure. And livestock was big back in the early days, and so you had a lot of livestock, and it slowly increased into the first tractors, the first farm equipment, the motorized equipment, and so we've seen a lot of change in that over the years.
Wow. And you see it probably continuing to change also.
Yes. Right? Yeah. I think down the road we'll see farms. Clark County's fortunate. We still have a number of family farms. I think we've got 400 some farms in the county. As these farms, the younger generation leaves the farm, farms consolidate. These farms are becoming more like a commercial business. They're larger. Many times they have, they're not just doing farming. They may have a trucking business. They may be selling feed, grinding feed. They may be selling seed. So there's multiple things that these farms are doing now, as opposed to just strictly raising corn, soybeans, and hauling it to the market. So you have more risk involved there. And as they become larger, there's more risk, and you run into issues of having multiple counties that they're working in and on the road with heavy farm equipment, which poses its own risk.
With the change in farming, 100-acre farm back when this company started would have been a huge farm.
Yeah,
But now an individual can farm hundreds of acres.
yeah. We see, probably our average farm size today is in the 1,500 to 3,000 acre range, and we have many that are over that in the 5 to 10,000 acre range. So, and some of them larger than that, but yeah, you're seeing more acres, more employees. Used to you didn't have many farm employees. Now there's, maybe they have multiple employees.
Do you get into crop insurance?
We do. The mutual doesn't deal in that crop insurance side. We stay out of that side, but the agency side does crop insurance. Kind of goes hand in hand with the farm management programs that are there. And quite frankly, the financial institutions are becoming more demanding as far as carrying crop insurance coverage. Yeah.
You mentioned, now we've been talking about Marshall Mutual Insurance Company, but you also have an agency here, which is?
We have Shore Murphy Agency, which is housed in the same location, and myself and Greg Keller. Greg Keller is assistant manager. I'm the manager, the Marshall Mutual. And then on the Shore Murphy side, Greg Keller, Wendy Tharp, Jason Huddleston, and myself are partners and principals in the agency. And Shore Murphy actually has 7 employees, and some of those are shared between the mutual. And so it helps the mutual and the agency side because we share expenses.
In 25 words or less, what's the difference?
The Shore Murphy Agency is an independent agency. We represent multiple companies, and on the Marshall Mutual side, it's a captive agent. It's Marshall Mutual Insurance Company is its own insurance company. Yeah.
Well, thank you, Jeff. I again appreciate your time and outlining some of the history of Marshall Mutual. It's been a long-term part of Marshall, and it looks like it's set for future generations even. Thanks again. I appreciate your being
Thank you.
willing to make this interview, and we certainly appreciate that for future history.
All right, thanks.